The Nikkei more broadly is now down about 9% from its March peak, but we've got a chart on the Bloomberg terminal here that shows the CSI 300 was actually up last week and is now beating the Nikkei. Do you think this is maybe the start of a trend? You know, maybe we're seeing some profit taking in Japan and a bit of investment in some of those really beaten up Chinese names?
Absolutely. I think there's been definitely a very volatile shift happening in the market. And in Asia, we've seen currencies move very dramatically. And China is, has been the drag of the market, and that has stabilized somewhat. So I expect this kind of volatility to continue with the rate confusion in the market or a reset of expectations in the market. In terms of the Japanese market, we still hold a very positive view there. But obviously, the yen has been a very strong focus for investors. So the way that we look at it, we need to be very focused on selection within Japan. And what we still like is really the Japanese properties. So we still see the domestic Japanese property as one of the promising areas to invest in.
Do you also like some of these other names that have perhaps been a bit on the nose recently, particularly oil, energy stocks, fossil fuels? They have been doing quite well, perhaps at the expense of some of the more sustainable investments.
That's a great question, and I'm often asked by investors, how do you actually even look at sustainability in Asia in this kind of light? And my answer would be that we are still in the very early stages of sustainability development within Asia, and I think the conviction from the top to the bottom in Asian countries is very high. So sustainable development remains to be an area where it's often overlooked by investors, especially when oil price is doing well. It seems to be much simpler to just invest in oil and invest in the brown energies. But actually in Asia, sustainability development is still very much ongoing. And I would actually like to argue that there is a tremendous investment opportunity here for investors to achieve alpha. So actually excess returns over the oil stocks by investing in new energy infrastructure in Asia, by investing in electricity grid across the region, and by investing in, for example, natural gas, which is also an important transition fuel for a lot of Asian economies.
Something else that might take a little while to bear some fruit is Korea's Value Up program. We've seen investors leaving that market just because they've been a little bit disappointed with what they've seen so far. But how long do you think until we start to see any sort of concrete returns in comparison, for instance, to what we've had in Japan?
We've definitely seen that episode before. In Japan, it took a long time for the consensus to be built and for the corporates to actually step up, for management to step up and to really take a critical look at their shareholder return programs and really commit to optimizing their balance sheets. So in Korea, we expect something similar to happen, but obviously the market recognized a similar pattern and have rallied up very, very quickly. And again, indiscriminately, a lot of stocks went up all at once. And in our experience, as one of the first institutional investors that signed up to the stewardship code in Korea, we see tremendous differences and divergence among different management of different companies. So the companies that will change will enjoy a much better valuation over time compared to the companies and the management that are very slow to move. So again, we believe this remains to be a very interesting thematic for investors to invest in Asia, as we're trading at such a large valuation discount compared to the global peers. And this would be another question about stock selection, but we remain optimistic about Value Up program in Korea.